Hi, my name is Tony Giardini. I'm the president and CEO of Trilogy Metals. Trilogy is listed on the Toronto and New York Stock Exchange under the ticker symbol TMQ. For more information about Trilogy, I encourage you to go to our website, trilogymetals.com. Today, what I'm going to do is take you through a presentation about Trilogy and our exciting opportunities in Alaska. These are high-grade exploration targets that we have and advanced development projects. We're very proud to operate in the jurisdiction of Alaska, and I'll tell you a little bit about our partners and the path that we're moving forward on to develop these great opportunities. With that, let me get started. Two of the metals that we focus on in Trilogy are copper and cobalt, and we see these metals as being critical for a green future going forward. When you look at copper, there's significant demand-supply deficits looming. Existing copper supply will not be sufficient to meet future demand when you factor in EV vehicles and electrification of the grid. In addition, on the supply side, mine supply continues, but lower grades are going to be mined moving forward. Whereas at Trilogy, we have a benefit of having very high-grade deposits, which should put us in a good position to supply copper to the market at very low costs. Trilogy has a 50% interest in the Ambler mining district. That district has already identified approximately 8 billion pounds of copper, 3 billion pounds of zinc, and over 1 million ounces of precious metals equivalent. We're located in the state of Alaska. We have strong partnerships, which I'll be speaking to. And as I mentioned earlier, we're talking about high-grade copper with zinc and precious metals and cobalt. We have two advanced projects. One is Arctic, which has an existing feasibility study. And the second is BORNITE, which is a large-scale exploration project. And I'll be speaking about both of these projects going forward. My background is I've been in the mining industry since 1996. I was recently president of Ivanhoe Mines and also the CFO of Kinross. And prior to that, had been involved with Ivanhoe Mines in the development of an Oyu Tolgoi project in Mongolia. Although I've only recently been appointed as the president and CEO of Trilogy, I've been with the company since 2012 as a director. Let me tell you a little bit about our share capitalization. We're in a strong financial position. We've got $12 million of cash on the balance sheet. We've got a joint venture interest or share of a joint venture interest cash, $72.5 million. We have no debt. We have major shareholders that have been with us a long time that account for approximately 65% of the outstanding shares of the corporation. Overall, we're in a strong financial position with the ability to advance the exploration of our projects moving forward for a number of years. As I mentioned earlier, there's a number of key partnerships that I'd like to highlight. Let's start with South32. South32 is a large Australian-based multinational, the market cap of over $6 billion. It acquired a 50% interest earlier this year by investing $145 million, resulting in the creation of Ambler Metals, LLC. So South32 contributed $145 million into the LLC, and Trilogy contributed its interest in the Ambler mining district. What is that interest? That interest is 172,000 hectares of exploration ground located in the northwest part of the state. And this interest was acquired in a couple of stages. The first was through a deal with Kennecott back in 2003, and the second was with a deal with NANA in 2011. And this area of interest is now bound by the blue border on this map, which indicates what is covered by the joint venture between South32 and Trilogy. We're also partners with NANA. NANA has a rich mining history. They're a native corporation located in the northwest part of the state. They own the ground on which Red Dog mine currently operates. Red Dog is the largest zinc mine in the world. It's operated by Teck. And in many ways, we're modeling the development of the Ambler mining district on how Red Dog was developed. Red Dog was discovered, but in order to be brought into production, they needed infrastructure to be built to allow them to bring the concentrate to market. That involved a road and a port. In our case, we're focused primarily on developing a road that would allow us to connect to existing infrastructure. And we're following that Red Dog model. We'll be working with ADA, which is a development agency in the state of Alaska, to help fund the development of that road. And then we would pay tolls as we ship concentrate from the Ambler mining district to the Dalton Highway and then onto the Anchorage port, which is a fully developed port that operates on a 365-day basis. Having NANA as a partner helps us in many ways and will benefit NANA as well, from an employment perspective in terms of procurement opportunities, and in addition financially. NANA will have the ability to either take a direct interest in mines that are developed in the Ambler mining district or a net profit interest, depending on the decision that it makes. If it takes a net profit interest, for example, it can take an interest of 15% after we've recovered our capital and an agreed upon rate of return. So this is a good deal for NANA in terms of the development moving forward, both financially and also in terms of development of employment for its shareholders that are located in the district. Let me speak now about our partnership with ADA. As I mentioned, ADA is a development agency in the state of Alaska. And what we're focused on developing is a road that will connect the Ambler mining district to existing infrastructure. We're talking about a 211-mile road that would connect to the Dalton Highway. The Dalton Highway is already a 2-lane paved road, which would allow us to transport our concentrate to Fairbanks, where we could then rail that concentrate on existing rail facilities to Anchorage, where there's an existing port. So the missing link in this equation to opening up the Ambler mining district is this 211-mile road. So where are we at in this process? Well, we're in a strong position in that the infrastructure already exists for the port in Anchorage, as I indicated earlier. That port would allow us to ship concentrates directly into the ship hold as opposed to having them loaded into containers. In terms of a road, we received the record of decision on the road in July of this year. This was a long process that involved a number of steps, including preliminary EIS, a final EIS, commentary period that allowed for sufficient input to focus on what the impact of a road would have on the Ambler mining district. This puts us in a position now where ADA will look to advance the next phase, which is the detailed engineering, the financing, and construction of a road. We see the road as developing in 3 phases. One, an initial ice road. Secondly, what would be called a pioneer road. And finally, what would be called an all-weather gravel access road. And that gravel access road would initially be a single lane with pullouts, eventually becoming a 2-lane road. And the road would be a private industrial use road only and would be paid for through tolls that would be charged to Trilogy and others that are developing assets in the Ambler mining district. So we're in a strong position to move forward, and we're working closely with ADA on the next steps of detailed engineering and ultimately entering into a tolling agreement to allow for the construction to begin on the road. In terms of the road location, a number of alternatives were considered, but ultimately the decision was made to have a 211-mile road, which would allow us to connect to the Dalton Highway. And that road, as you can see on this slide, intersects our major deposits, which are the Arctic and Bornite deposits, and allows us to look at the integration of other opportunities in the district, which I'll discuss when I highlight some of the exploration opportunities that exist in the Ambler mining district. This is an overview of what Arctic looks like. It's the most advanced project that we have right now in the Ambler mining district. The resource is large, 43.4 million tons, at a very high grade of 4.2% copper equivalent. In addition, there's 3.5 million tons of inferred resource, which with additional drilling could be converted to measured and indicated and eventually mined. So we're in a strong position in terms of the financial viability of moving forward with respect to Arctic. This is what a cross-section of the deposit looks like, and what we would do is remove the overburden to access the ore body and operate Arctic as an open pit mining operation. We published a feasibility study earlier this year. This was a Trilogy feasibility study. We had previously published a pre-feasibility study in 2018, and we published the final feasibility study in August of this year. That feasibility study indicates that we have a robust project here. We have a project that generates an NPV on an after-tax basis of approximately $1.1 billion. If you look at it in the context of current metal prices, it's over $1.4 billion. It would have a very robust internal rate of return of 27%, and at current spot prices, it would be around 30+%. Cash costs net of byproduct credits are low 32 cents on the base case scenario, but when you look at it based on current prices, it's actually -2 cents when you take into consideration all the credits that are there. And this project also has what's called a low intensity capital ratio per equivalent ton of copper of $6,432 per ton. So we're in a strong position. Right now, we're looking at a mine life of 12 years, but when I speak about the exploration opportunities in the district, it will be possible to see that mine life increase over time as we have exploration success, and those additional deposits can be processed through the Arctic mill. This slide shows what's termed the profitability index. What the profitability index does is it takes the NPV of a project and it divides it by the capital that would be required to develop that project, both initial capital and sustaining capital. So the better the project, the higher up it is and the further to the right it is. And as you can see, Arctic is right up there at the top and the furthest right. So that means it has a high IRR, but it also has a very high profitability index. And so it compares well to other developed and undeveloped projects that are out there. In terms of how the cash costs stack up, it really depends on how you look at Arctic in terms of, is it a copper mine or is it a copper mine with gold credits or byproduct credits, or do you convert those other metals into copper and just look at it based on the strict cost associated with that. So if we look at it as a copper mine with byproduct credits, you produce 155 million pounds of copper a year at, as I said, 32 cents. But as I mentioned earlier, based on current prices, it would be around -2 cents. If you look at it where you convert all of the other metals into copper, you're talking about 270 million pounds of copper a year at $1.46 per pound. So this is a robust operation, whether you look at it with copper credits or you look at it as converting the metal into copper. In terms of the products that we'll be producing 3 separate concentrates. One is copper con, the second is a zinc con, and the third is a precious metal concentrate. Precious metals accounts for about 13% of the revenue on a base case, but if you look at it in terms of current spot prices, it accounts for more like 20% of a revenue of a project. So this project actually will produce roughly 80,000 ounces of precious metals each year that it operates. And that gives us a lot of opportunities to look at funding options in terms of how we move forward in developing this project in the future. This slide just provides an overview of the valley looking northeast. This is a conceptual indication of how we see the mine site with the open pit on the right, the tailings facility on the top left, and the processing plant in the valley. This is a very small footprint overall. So we're in a strong position in terms of being able to manage the environment and to responsibly develop this mine going forward. In terms of the mine permitting process, we've now completed the feasibility study at the Trilogy level. That information is going to be provided to the Ambler Metals LLC, and they're going to be looking at optimization opportunities, which will consider the processing rate of 10,000 tons per day. It will consider the infrastructure location that I indicated on the previous slide, and it will consider how we incorporate other deposits into the development plans in the future. And once we've done that optimization, then we'll look to commence the permitting process, which we would expect to do together with moving forward on the development of a road, which puts us in a position to advance both those processes concurrently. In terms of federal lands, there are no federal lands involved, which makes this easier to permit. Most of the permits that we require are state permits, and we'll be working closely with the state to meet all of the requirements and obligations to obtain those permits in a reasonable time period. There's one 404 wetlands permit, which will be required from the U.S. Army Corps of Engineers, and that's the only significant federal permit that will be required moving forward. In terms of district exploration, and we're just talking about, we're talking about Arctic here, but I'll come back and speak a little bit more about bornite. There's a number of exciting targets that are already adjacent to the Arctic deposit. And as I said earlier, right now we're focused on a 12-year mine life, but we believe there's considerable opportunity to extend mine life beyond 12 years. So we've got Horse Creek, which has 10 million tons at 2.84% copper equivalent, Sunshine, 20 million tons at 2.12% copper equivalent, and Shunnak, which also has 1 million tons at 4.32%. So there's lots of opportunities to incorporate satellite deposits into the Arctic mine plan going forward. And at this point, they haven't been incorporated in terms of the economics of how we're looking at that plan going forward. This is a VTEM survey that we ran, that we completed in 2019, and the colors, the red and yellow, are selected prospects. The red are our first priorities, and the yellow are the second priorities. Just to highlight, that's what Arctic looks like on the survey. So you can see that that red dot comes up against an existing ore body quite well. But what's interesting here is if you look at the left of the slide, you'll see that center of universe deposit, which we haven't conducted any exploration on at this point. And looking at Sunshine, for example, where we did put in a couple of drill holes, which I'll speak to in a minute, there's an anomaly to the left as well, which at this point we haven't drilled. So we continue to believe there's significant upside in terms of exploration potential in the district. And although in the Ambler mining district, there's been a lot of exploration conducted since the 1950s, approximately $150 million of exploration, we're now in a very well-funded position as a result of the creation of a JV with South 32 to look at more drilling and conduct enhanced exploration in the district. These are the drill results from Sunshine drilling that we did in 2019. And if you look in the far right column, you'll see what the copper equivalent grades are. This is very similar to the types of grades that we have at Arctic. So we're very excited about Sunshine, and we're looking forward to getting back in to do additional drilling at Sunshine in 2021 when we conduct our field exploration season. In terms of the type of deposit, Ambler is what's called a VMS type deposit. And to give you an example of how it compares to some of the other deposits in the world that are also VMS deposits, you've got Flim Flon located in Manitoba, Noranda in Canada as well. And you can see from both the descriptions of both Flim Flon and Noranda that what you have is a long mine lives. So 75 years of mine production at Flim Flon, 85 years at Noranda. And we believe that the Ambler district is similar to both Flim Flon and Noranda in terms of prospectivity and in terms of having operations there for a long time. But right now we're focused solely on the Arctic deposit, and we'll go through a permitting process with respect to that. We'll then turn our attention to other deposits in the district, including bornite. Once again, this is an overview of some of the exploration potential that I've already discussed. We'll talk a little bit about bornite in terms of the opportunities there. You can see that on an indicated and inferred basis, there's over 180 million tons, grading approximately 1.5% copper at Bornite. We are focused on looking at exploration in the entire district, and we'll be advancing our exploration program in 2021 as we identify some of the targets that we want to drill adjacent to Arctic and also adjacent to Bornite. This is a photo of a Bornite core, some examples of drilling that has happened at Bornite. When we entered into our option agreement with South 32, we conducted significant exploration at Bornite, approximately $30 million, and we were quite successful in terms of proving out additional resources, and we look forward to getting back into Bornite to continue our exploration activities there in the future. When we look at resource scale versus grade, you can see that Trilogy has a very high grade and the potential to increase its resource scale substantially as a result of the number of exciting opportunities for exploration in the district. The next upcoming catalysts for us in 2020 include the optimization of the Arctic feasibility study, which Ambler Metals will focus on. And then we'll be looking at the budget approval for the 2021 field season, thinking about where we're going to be spending some of our exploration dollars going forward. Just to summarize, we're in a strong financial position. We've got a strong balance sheet. We've got the ability to fund exploration success going forward. We've got an advanced development asset in Arctic. We've got significant exploration opportunities, including Bornite. And we look forward to updating you on our activities in the future. As I mentioned, we're listed on the Toronto New York Stock Exchange under the ticker symbol TMQ, and I encourage you to go to our website for more information, trilogymetals.com. Thank you very much for your time and attention.